What's going on, guys? Welcome to Sunday Night Charts on Tuesday. What's going on? How you doing? My name's Jim. I'm a crypto trader, Forex trader, here to help you understand the market from an Elliott wave perspective. Hope you guys are good. Let me know audio and video is good. We're going to get started on the analysis, guys. We got FOMC tomorrow. That means the rate announcements for FOMC are going to be given tomorrow, 2 p.m. rates, 2 p.m. Eastern time. And then at 2:30, I'm assuming there's going to be a, let's check it out on the calendar. Looks like there's going to be Wednesday right there. Should be a press conference. There is press conference at 2:30 Eastern Standard Time in the U.S. So tomorrow's a big day for the markets. Is it going to pump? Is it going to dump? Now, I think everybody's expecting, best I know, guys, everybody's expecting rate cuts. Now, the question is how many are because it seems like Mr. Powell kind of indicated the willingness to cut the rates, and I think there's already a half a basis point already baked into the market. So that's kind of already baked into the price pump that we've seen. However, is there a bigger pump? Is there going to be a surprise cut that's coming? If so, we can expect the markets to pump, but maybe not on the announcement. So that's the question mark. Are the markets going to pump on the announcement, or are we going to get an anti-logical dump? If number one, if the markets, if FOMC calls for a rate cut, that's usually bullish for markets. Okay. And so is that going to cause a dump instead, which is anti-logic? It goes against the logic, and then we get pumped next week or whatever. So anyway, I guess the question is, how is the FOMC going to affect the FOMC rate announcement going to affect the Bitcoin market and the traditional markets? We're gonna try to see if we can get ahead of the wave structure on the charts and see if we can maybe predict where price might be headed. Maybe just offer some ideas at least based on the wave structure analysis. So I'm going to try to give you some wave structure analysis the best I can tonight, and we're going to spend about the next hour in the market, guys. I have been gone to Kansas City all day today trying to help my daughter find a used vehicle because somebody hit her and totaled her car several weeks ago, and this is the third time she's been hit by somebody else's negligence in like 2 years. And that poor girl, I'll tell you what, but I'm trying to be a good dad and help her out. She's only 21. So anyway, I've been away doing that all day. I flew in from Virginia last night, so I didn't get in till like 9:50 p.m. So I was at my dad's house for his birthday on the 14th of September. So that's why we didn't do Sunday night charts, and that's why I didn't have Sunday night charts. But that's why I'm here on Tuesday night to try to give you guys some analysis, because I don't want to leave you in the lurch, especially at this important time in the market. So with all of that said, welcome to Tuesday Night Charts. I hope you're excited for the analysis, and I hope we can work together and see if we can look at the market. I'm going to offer my ideas. You can offer yours in the chat. Let me say hi to everybody that said hi to me. And before I do that, let me just remind you, don't forget, I'm not here to give you financial advice. I'm not a financial advisor. I'm just a guy, and now I'm living in the state of Missouri. The state of Missouri, excuse me. That was intentional. I live in Missouri now. Missouri now, and I'm just a guy looking at the charts with you on Tuesday night this week, and we'll look back again on Sunday night coming, and we'll see how the markets are doing. So, hey Keith, what's up? Moonboy counts are on the way as always. What's up, buddy? I hope you're running well. If you're running at all, hope you're doing well. What's up, Epsilon? Hope you're well. Hola, Pump it. And Mr. Fairhill, hey buddy, how are you doing? I'm well. And glad you're here. All the familiar guys. We got Andrew Vegas Investments. Hey, man. I hope you're well. Always glad you're here. You're so faithful to watch every week. I appreciate you. Ricky Spanish, my brother from another mother. I hope you're doing well, man. How's life there in Atlanta? Between the aisles. Hey, bud. You looking for the moon? Looks like a lot of you guys are bullish. You guys bullish? You waiting for a pump? And that's what scares me just a little bit. I wonder if there's going to be a bit of a dump, because I think I've been seeing a lot of XRP videos and how XRP is getting ready to go to the moon. And I think everybody's expecting the markets to pump, and that kind of is pointing me away from the pump. And I wonder if we're going to get a dump first, because I have a principle that I teach everybody, and this is it. The markets go where you expect them to go, just not in the way you expect it. Let me say it again. The markets often go, most of the time, they go where you expect them to go, just not how you expect it. So be careful, because those pumps and those dumps kind of come out of nowhere, and they come in a way that is opposite of what you think is logical. If everybody's looking for a pump, be a contrarian and maybe consider that a dump might be coming, or a fake out might be on the way. What's up, that's Joe Coco? How you doing, buddy? Good morning. Good morning to you. Adrian, hi, buddy. I hope you're well. You want the ultra bear count? With that weekly bearish divergence. Okay. I'll give you, what I make myself do is I try to look as, and so those of you watching for the first time, maybe, what I try to do is I look at the wave structure. Maybe you're new to wave structure analysis. There's a thing called Elliott wave theory. Look it up. I've got a course on my channel about all the rules of Elliott wave. If you want to watch a couple videos, I got a playlist you can see. It's called Trading Night School, and in there I teach the basics of Elliott wave theory. And on my channel on Sunday nights in particular, I apply Elliott wave theory to the market, and we see what we can see as far as what the wave structure is telling us about which direction price might be going. It's another piece of analysis that a lot of guys just don't have a lot of knowledge of, or understanding of, or even skill in applying. And I'm just really good at it. I'm really good at seeing patterns, and I'm really good at I understand the nature of Elliott wave theory enough to apply it to modern markets. And so I apply it in kind of a unique way, and in a quick way. I'm not one to offer these how do I say it? These charts that are full of a bunch of letters and numbers and all over the place, counting every wave. I generally look for the basic shapes, the 5s and 3s, and that's really the key to Elliott wave theory, that the market moves in 5s and 3s. So we try to identify those 5s and 3s and put them together in meaningful patterns that Mr. Elliott found about 100 years ago in the market when he observed markets. Now, modern markets are a little different, and modern algorithms, the AI bots that trade against us, they're well aware of Elliott wave theory, so they use Elliott wave theory against us and often offer fake outs for us. And so every theory out there, every trading style out there, you just need to realize that the modern AI bots are well aware of those trading strategies. Where do you think you learned those trading strategies, guys? The banks are the ones who taught them to you, so that you'll understand markets from this perspective that kind of keeps you trapped and losing money. The key to trading, if you want to make money, I'm going to tell you something very, very important. If you want to make money in the market as a trader, it's not about what your strategy is. There are strategies that are better than others. There's no doubt about it. It's not about what your TA is, to be honest with you, but there is TA that's better than others. It's really more about your ability to manage your risk. And whenever you have a trading idea, learning how to enter into a trade at the lowest risk possible, okay? And then learning, here's the big kicker, it's learning how to be wrong and lose a little bit of money. You see, there's 5 outcomes to a trade, guys. There's 5 outcomes. There's a really big win, that's one outcome. You can have a small win, that's a second outcome. A third outcome is you can have a break-even trade where you don't win and you don't lose, you just kind of break even. A fourth outcome is that you can have a small win, and who knows what the fifth outcome is? Anybody know what the fifth outcome is? Let's give you guys a chance to respond. I'm going to take a break and take a sip of a drink and see who can get the fifth outcome and put it in the chat. See who can do that. That'll tell me who's listening to the live stream, who's actively here and ready to engage with me. Dun, 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 dun. Fifth outcome is a wife changing experience. It's a wife changing experience. I love it, man. Yep. If the fifth outcome happens, you might have to change wives, Adrian. Because she might be a little bit upset. Andrew Vega says it's death. The fifth outcome to a trade. Anybody else want to give it a go? I think it's hilarious, though. It's a wife-changing experience. That is so funny. Oh, that's hilarious, man. There's a song, there's an old hymn. If you're a Christian, you'll kind of be familiar with it. If you know old hymns, it's called "Take My Life and Let It Be," and that's the name of the song. It's a song calling for God to take my life and let it be consecrated to you. Anyway, that's the title of the song. And we often joke is they take my wife and let me be. That's just kind of one of those little jokes whenever I see that hymn. All right, the fifth outcome to a trade is a big loss, and that's really the only outcome you don't want. Is you don't want a big loss. You can handle any of the other outcomes. So as a trader, the key to making money in the markets, guys, is not really about your strategy. It's not about your TA. It's about your ability to enter into a trade at the lowest risk possible, at the least risk possible, and then secondly, to know how to exit a trade when you're wrong. Okay, and it's really also knowing how to exit a trade when you're right, not letting greed keep you in a trade too long. FOMO or fear will get you into a bad trade. Greed will keep you in a good trade too long. Fear gets you into a bad trade too early, usually. Greed keeps you into a good trade too long, and then hope will magnify or multiply bad trades. Anyway, fear, hope, and greed are bad ways to make decisions, guys. You got to learn how to make decisions without those emotions. Okay. With that said, so don't forget, I'm not here to give you financial advice. I just want to show you wave structure analysis from an Elliott wave perspective, and I hope it supplies just a missing piece to your technical analysis that you can add to what you already do to just give you a well-rounded look at the market. Wave structure is a really, really good way to do that. So I hope that's why you're coming to this channel. All right. With that said, let's jump into the analysis. All right. I think I said hi to everybody. What's up, Camel? Good to see you. See that you popped in. I was just doing a little bit of just a fun rant. It wasn't a rant. It wasn't one of my rants, actually. It was just an admonition and encouragement to you guys as you're trying to learn to trade, trying to become successful in this market. It's really not about whether Jim gets it right or anybody gets it right. It's about managing your risk and learning how to lose a trade. All right, so what's going on with Bitcoin, guys? I'm on XRP. Let me go to Bitcoin. Okay, so looking on the 2-week chart here, guys, I don't want to spend a lot of time on this wave structure here. So I think a lot of people are looking for this right here to go up and make the next high. Okay, I think that's kind of the expectation, and I think that's not a bad expectation for sure. That's not necessarily wrong. We had a bearish engulfing candle here, but then we had a green candle that followed it that took back most of it. Now we're in the middle of a week here, and it's a green candle, but it's really an indecision candle. So just looking on the 2-week chart, as a 2-week chart, let's look at the weekly. There we go. On the weekly here, we're taking back a lot of this dump, and if you look at it from an outside perspective, it just kind of resembles a 3-wave shape. So is that a 3-wave, and now we're ready for the next wave to the upside? It's very, very, very well may be that totally. All right, now is that certain? No, it's not certain, but certainly a possibility, and that we could be setting up for a bigger move to the upside. Now, that's the bullish look at it. Now, it doesn't have to go up and keep going. It could just go up and hit the high and dump. All right, right there. There we go. So if this wants to go up and hit the high and dump, it can. But if we get what we call in Elliott wave theory an extended fifth wave, where the fifth wave just kind of keeps going and going, pulls back and goes, and it kind of gives you the wave 4 look. You see how we had a wave? Come on. See how it had a wave 4 look here and then a wave 5 look where it took the high? Well, that's significant. You want to pay attention to that. But as it's pulled back, it hasn't broken any levels. It hasn't taken any traders out. It's just kind of hanging out up here. It's kind of pulling back in 3 waves. And now it's looking like it's ready to start rocking to the upside. Is that getting ready to go hit the upside? I mean, it very well may do that. And so an extended fifth, it's a fifth wave that kind of just keeps going. Okay, it just kind of, and usually an extended fifth, they like to get parabolic really fast, and then they dump. They get parabolic, and then they dump right afterwards. To give you an example of a time where we had a nice extended fifth in a wave, this wave right here on the smaller time frame, there was a nice extended fifth, and then in wave 1, you had a nice extended fifth right in there as well. But if we zoom in just a little bit, I'll just show you an extended fifth wave on the smaller time frame. You can kind of see the way extended fifths look on the chart. Okay, so right in here we had kind of a it's not a super extended fifth, but it's a nice shape there. Let's look on the daily maybe and see if that's a better. Yeah, there you go. So what an extended fifth does is you'll notice that this fifth wave is almost the size of waves 1 to 3. Almost, it's almost a 1-to-1 correlation to that. So that's one thing it does, is that the extended fifth is usually going to be the longest, one of the longest waves, or equivalent from wave 1 to the top of wave 3. Very similar. So it's one thing extended fifths do. And notice the shape of it. You had what looked to be a fourth wave boom, and then what it does, it just kind of goes up and looks like it's getting ready to come back down, because that's the way a wave 4 and a 5 looks, and then they dump, right? But it just kind of keeps going and it goes fast. Okay, so that's what extended fifths do. And so you got to offer that as a concept. If this thing wants to pick up some speed here and go hit the high really quick and then dump after that, we could have some kind of extended fifth going. And I think that's the bullish count. That's the bullish hope. That's what the bulls want to see playing out on the higher time frame. So when we apply that concept or that look to the monthly chart, for instance, what we're looking for here in a fifth wave is for this to start kind of getting parabolic. Okay, and this last wave, come on, Jim, I can't draw it really well. Okay, kind of get a blow off top and then just come back down. Okay, and then all of a sudden you had all this wave here, but this wave is a fifth and it has an extended fifth in it. Now, one might argue that it's already there. It's already been an extended fifth. It's already finished. And I'm arguing that that is a possibility, okay, that it's already finished right up in here. We'll talk about that on the small time frame, that it's already equivalent to the first three waves, okay? Now, in my world, I look at this and I think this looks very, very much like an expanding diag, okay, with a throw over. Okay, see, we came up to that line, bounced off, and then came up, and now we've thrown over. Okay, and I think a lot of times you get those throwovers, and then they come back in. And so the question becomes: is this gonna fail here? And is this green candle on the monthly in the September going to turn into a red September month? Okay, that's the question. But this looks like an expanding diag to me on the macro, and you got a 1, 2, 3, 4, and 5. And each of those waves has 5 waves in it. So I'm calling that a leading diag. So my main count, my personal main count, is that this this is finished. Okay. Now there's two places it could finish. It could have finished here, which is fine, or it finished here. Okay. Or it has one more hit to the high to go, maybe, and then it'll be a finished wave, and you can count 5 waves to it. I tend to believe that we got on the fifth wave, we got 1, 2, 3, 4, and 5 to there. And what's happening here, and I've been talking about this for quite a while now. Let's look at on the weekly, that this is a 3-wave. Come on, Jim. This is a 3-wave move down, and this is actually a 3-wave move up to here, and now we're looking for 5 waves down. Okay, actually right there to the top, 5 waves. And what we have working here, what's happening right here, is that this is actually potentially, you got to count this wave structure as a 1, 2, 3, 4, and 5. I'm personally looking for the 50K mark, and I see this as a real possibility here. Okay, that we could get some kind of a dump or fake out to the upside, and then we could be beginning on FOMC tomorrow, actually a dump. Okay, that this could start coming down with some speed, maybe quicker than I even anticipate. Okay, maybe I don't know. I don't know anything. I never do, but it's possible that we have a 1-2 on our hands, and this is getting ready to come down. Personally, I like a bullish wave. Okay, I have got another count of this wave, but What if all we get that this right here is a wave 2, that we have a wave 1 to right here, this 1, 2, 3, 4, 5 is wave 1. And a lot of times when you got leading diagonals, okay, which is very bullish, okay, it's very bullish. A lot of times the wave 2 is very shallow. Okay, it retraces in a very shallow manner, and bullishly with expanded flats, where this becomes an expanded flat. We come back down to support around 50K, maybe even it wicks down to 40K, scaring everybody, and then we get a V-shaped recovery. And next thing you know, we're finally hitting the 200K mark that everybody's been looking for, and going even higher than that. In fact, we would be going to the moon after that. Okay, you want to talk about moon boy counts. If that's a wave 1 and that's your wave 2 right to here, the next wave we're talking 3, 4, and 5. We're talking $1 million. Okay, we're talking even bigger than I've got drawn here. The question is, how fast will it go up? I don't know. But if you want to just look at what I've drawn there, you're talking, that's only 10 years. Okay, that's like 10 years of price action. So I don't know, but that's a very, very bullish count. But it has us going down to 50K first before getting a V-shaped recovery. In which case, then that's when we become ultra bull on Bitcoin, and that may very well be. So I think everybody right now is looking for this thing to pump up the jams right now and go up to 100K. But I personally think I really want to see this retrace with some meaningful way. Okay, stop hunt, if you will, liquidity grab, if you will. Okay, come back and retest the breakout right here. Here's the breakout right there. You say, well, we did retest it right there. Well, a lot of times it's not just one hit. You come down and you hit it twice, and then you bounce off it. You come back and break it, and then you go. And so I think that's a real bullish count that may be playing, okay, on the macro chart. Okay, let me give my voice a break for a moment and take a drink, and I'll be right back. Now, I didn't want to get too sidetracked in the macro count, but that's an ultra bull count, but it has us coming down to 50K first. Now, is that a certain thing? Is that definitely going to play? Yeah, I don't know. But let's now look at this local wave in light of that analysis and say, okay, what's the chance here? What is the chance that this is coming down? And what is the wave structure that we're looking at? How do we interpret it? Okay, so let's look at it. Man, I have a major headache right now, guys, and I'm so sorry. So I may have to cut this a little bit short, but I'm gonna pressure through. I'm gonna push through, and give you the best analysis I can give you. I want to do well for you, but man, I've got just a monster headache right now. It's just like throbbing. It's like a migraine. But we'll keep rocking. I'll do my best. All right. So what's happening in this wave? Well, the way I'm looking at the wave, just zooming out just a little bit, analyzing this, my primary count, or my number one idea that I tend to keep gravitating to, is that this is an A wave, that's a B wave, and all of this right up to here is a C wave. Okay, so that is what we call an expanded flat B wave. What do you mean expanded flat B wave? Well, we already have A, B, C. There's your A wave. Okay. So right there's A, the B wave that took that high out, expanding it, and now we're looking for C. And so C would bring us down to that 50K range. Would bring us down to that 50K range, likely. And the C wave is usually 5 waves. And so right now we have to consider the possibility that this was the end of that B wave, and this is the beginning of the new wave to the downside. And we're looking for 5 waves. So how do you count it? Well, this wave would be wave 1, and this wave would be wave 2. Wave 2. That means we're looking for wave 3, 4, and 5. Okay. Now that 4 is probably going to take a different shape than 5, something like that. Okay, I mean just some wave 4 looking shape. Okay, now, so how do we interpret this? Let's put that to the test. That's the question. So there's a macro idea. I don't know if that's going to play, but that's one way to interpret these waves. Okay. Now, one of the things you need to know is that wave becomes invalidated. In other words, we can't say that that's true and that's the interpretation of these waves if this wave comes up and takes that high. So that's really easy to know. So per Elliott wave rules, if this wave comes up and takes that high, then we can no longer interpret this as a 1 wave and a wave 2 looking for wave 3. You'd have to interpret it some other way. So what else could it be? Well, so not what else could it be? Let's just say that if this pumps up this tomorrow or and keeps rocking, okay, then we're going to abandon. Number one, I'm going. If we hit the high again, more than likely, I'm going to abandon this right there as a ABC. I'm just gonna it's just every time it hits the high, it makes it less likely. Okay, it was looking really good when this high was hit because that looks like a 4 and a 5, right? But then it came down and then hit the high again. That's still okay, but this is a little out of proportion. It's not my favorite, but it's not invalid. It's just a little out of proportion, and I'm not a huge fan of that count. But it's still valid, and I'm still holding on to it for now. So I'm still looking at this as a wave 4, and I'm looking at this as 1, 2, 3, 4, 5 waves in wave 5, and this was wave 5 here. Okay, so that means this is some kind of wave 1. Now I don't know how to count this exactly. Why? Because I don't see a clear 5 waves or 3 waves. It's just so ugly. But let's see if we can make sense of what this is. Okay, let's talk about this as a possible expanded flat. Right now you've got 3 waves right there, right? And then you've got another 3 waves there to the downside. So that's 3 up, 3 down. And this could be in the middle of making 5 waves. Okay. In other words, this could be 1, 2, 3, 4, 5, or this is 1, 2, 3, 4, and 5. In which case, what you have then is A, B, C, looking for this to come down afterwards. So if we pump up here, kind of stall out, and then start getting real bearish, you need to consider, that very much will be looking like this was wave 1 to this point, wave 1, okay? And this right here was a flat wave 2. And that's a way we can interpret this, okay? Camel Teabag asks, if we take the high, even if we hit 140, would that change my macro leading diag? No, it wouldn't be it would not change it. It would still be valid. It would still be it would be a deeper throw over, but it could still play. Would it have a beautiful count for that 5th wave? Would I have a complete make sense interpretation of this 5th wave and a way to understand it? No. Not really, but nothing's ever perfect either. Sometimes we have what I like to call it is what it is wave. What's an is what it is wave? Well, you try your best to apply Elliott wave theory to the market, but you realize that the market doesn't necessarily play by Elliott wave rules. Now, I say that all the time, but what do I mean by that? I mean that it doesn't mean Elliott wave isn't helpful as a way of looking at the market. It just means that the market makers aren't subject to Elliott wave rules. They can take highs out if they want to, and they can do it with 3 waves or 5 waves or whatever waves they want to. The general principle is that in general, the rules of Elliott wave keep us consistent in the way we analyze the market, and we do our best just to understand the wave structure. But we also hold those rules loosely, knowing that sometimes you get a wave structure that looks finished, and then they'll go hit the high again. And it's what I call a +1. You get what Elliott would call a finished wave, and then you get one more hit to the high. But sometimes that one more hit to the high takes on multiple hits on the smaller time frame. So they'll hit it, and they'll hit it, and they'll hit it. Okay, what's an example of that? Well, here's a great example of it right in here, where as you look at this wave develop, you had a really nice. Notice you had a wave 1 right there, and a really shallow wave 2. Okay, that's real shallow. Okay, then you're just wave 3 rocked. You had this pullback. It hit it again, pullback, hit it again, pullback, hit it again, and then boom. Okay, so that's kind of the way markets like to do. It'll pull back, hit it, pull back, hit it, pull back, hit it, but it'll just kind of keep going at you like, and it gives you the sense like it's never going to stop. But just when you think this thing is never going to stop, that's exactly when it stops. Okay, so you kind of got the same scenario rocking. You had a 1, 2, 3, 4, 5 right there. You had a pullback. They hit it. A pullback. Now they've hit it again, and they've hit it again. Okay, is it done? No, they could hit it again and then take it down, right? But it wouldn't really change the overall idea as long as they hit it and reject, right? If it hits and stays and small pullback and continuate, if it starts pumping from there, then I'm going to be like, well, I don't love it, right? I would have to, at some point, I'd have to let go of that leading diag. When exactly? When the wave starts looking like this, okay, that's when I'm like, you know what? That's not a leading diag anymore. I got to let it go. So if a wave starts looking like this, straight up, then I'm looking at this wave totally different. I'm looking at this as a 1-2, and that's a 1-2, and now we're in a major bull run, and we're not going to get a hit to the low like I was talking about. We're going to get a major pump. We might get pullbacks, but we're not going to revisit 50K again ever. Okay. Camel, do you really think everybody thinks we've stopped and topped? I don't know. I don't know if I hear people much more bullish on crypto right now in the world that I watch on YouTube. Very, very bullish. Who's everybody? I mean, what are you guys hearing? What are you guys seeing? Is the majority of I mean, from what I'm seeing, everybody's bullish on network news. Everybody's bullish on crypto. President's bullish on crypto, right? I'm really one of the only guys I know are talking about this being a potential top. Camel, where are you getting that? I just don't. Exactly, Chemo. Exactly. $1,000. Yeah, I've been getting those vids in my feed as well. I'm just like, man, something's going on. I'm looking for a dump, not a pump, because I keep getting these videos on XRP that's saying you buy XRP right now, buy it, buy it, buy it, and you're gonna be rich, XRP rich, and likely you will. But remember, the market goes where you think it's gonna go, just not in the way that you expect it, and that's the thing. That's the principle, guys. So, for me, the narrative is and here's a point. If the super cycle mentality is the markets can't allow a recession and won't allow it to top, but what they will do is they'll take some liquidity out with a sharp move down to 50K real fast, and then they'll V-shape it back up, and then they'll start rocking. In other words, that hit to the low first, that takeout, that very swift takeout, and then go. I can totally just see that coming, see that as a potential, and I think that's could be a likely play. Now, that's a bold thing? Is it gonna definitely happen? I don't know, but that would be a better scenario for the bulls, and that would be a way that liquidity could be taken. Okay, with a sharp move to the downside. Oh, let me draw it better. A sharp move to the downside. Let's take out this level, find that, and then rock. Okay, and now what I've just drawn, that's a year or two worth of price action. But if we get that kind of move, you'll see it recover quickly, potentially. I mean, it's at least an idea. You'll see it recover quickly, and that wouldn't be that wouldn't be the multi-year bear market that I've been talking about for a while, where we see some kind of a long-term bearishness to the market. Now, even a scenario like this, if this happens fast enough, as long as this begins to rally and rally slowly and just methodically, then all of a sudden, this looks bullish. It looks bullish for the next several years. And then if this wave is fast, and I didn't mean to draw it quite like that, but as long as this wave is fast and furious, and it V-shapes, then all of a sudden you have the wave structure we're looking for as Ellioticians. It makes sense, 1, 2, 3, 4, 5, with a 3-way pullback, multi-year, and then we go towards the end of the decade when they're ready to kick it in high gear. So just some ideas on the macro. I didn't really mean to get too involved there, but at least it helps to understand the implications of the macro count looking at the chart. Now what we need to do is some micro analysis on the small time frame. Okay, so looking at this wave in light of the macro analysis, what's happening? Well, if it's a one, we could boil it down to this: 2 basic counts here. This could be 3 waves: A, come on, B, C, that finished here. If that's ABC, we're pumping. And we're going up for another high. Now, where it takes us, I can't say, but we're going up for another high. How we get up there, I can't say. We could pull back and continue, right? Or we could kind of pick up some steam fast, little pullbacks, and go fast, right? It could get parabolic. So there's all kinds of ways it could go up. But if that's 3 waves, A, B, C, then here we go. Okay? That's one look. That's the bullish look. Again, we have all kinds of time for that because it's not going to go to $150,000 in one day from where we are. It's not going to happen in 1 week. It would take months for price to get up there. But we'd have some time to reevaluate that wave as the weekly price action plays. But that might be where we're going. That's the bullish look at it. Now, cup and handle is a fine chart pattern if you want to look at the market from a cup and handle perspective or from a chart pattern perspective. But here on this channel, we look at 5s and 3s. We practice Elliott wave theory. So that's not invalid. It's just a different way that we look at the market here. It doesn't mean it's the only way, but that's for the purpose of our discussion. We try to measure the 5s and the 3s. And if you're unfamiliar with Elliott wave theory, definitely check out my playlist on Trading Night School. And the first several videos are going to be all about Elliott wave theory and what it's about and how to begin thinking about Elliott wave theory. It's definitely an old playlist, but it's free and it teaches you Elliott wave theory, for free. And you can get a nice cohesive little crash course in Elliott wave. And then you understand my channel a lot better, how I'm applying these things. So yeah, definitely cup and handle is valid, but not a fan of looking at the market that way. Personally, because I think 5s and 3s are more accurate. They're more objective, but they're even subjective. No, I understand. I see you're looking at cup and handle. I got you. But it's just not the way I look at the market. That's all I'm saying. But thanks for offering that. Yeah, he's seeing it right here in the 4 hour, right there. Okay, second piece is the second way. Yeah, it's not there, but that's what he's kind of seeing, at least the shape, right? What else? What else could this be? So one bullish idea is that this was 3 waves, and now we're going to the moon. Okay, we're all we got to do is just kind of break out and keep rocking, right? So And that could take a couple of shapes. We could get some pullbacks here and whatever. So I've already covered that. I'm just reviewing so I got some cohesiveness in what I'm saying. Second piece of it is the bearish look. And that is, this was the last wave. There's 5 waves. 1, 2, 3, 4, 5 right there. There's 5 waves that finished the 5th wave of the whole 5th wave. So this is the 5th wave right here of the macro, which I've already covered. So this wave right here is the final wave in that. And this was the first wave to the downside. Now, it just depends on where that wave ended. So if it ended right here, that means this is a flat. And I don't think it's quite finished, but it's close. It's close. Let's look at the RSI. Let's look at the 4-hour RSI. Has us overbought here, and there's some divergence forming right there. It's not quite fully formed or finished, so I can see this forming some more upside. So that's a possibility that this is a flat. I've already offered that count, but I don't love that count because it just doesn't make sense of this wave. But it could later, right, as the wave forms. What else could this be? Well, I imagine this could be the 5th wave right here. You got 1, 2, 3, 4, and 5. And that's the 5th wave of this. And so this flat right there is wave 4. So that's wave 4, and this is all wave 5. Okay? What that would be then is we have some kind of a 3 wave that's beginning here. 3, 3, and 3. Okay? Now, if that's finished, we might be in for something like this. So if that's this could be a W wave, and now we're in for some kind of an X wave, followed by some kind of a Y wave. W, W, X, and Y. That might be what's happening right now. This could be a what do you call it? A complex correction here that ends up dumping. Okay? All right. So, yep. And a head and shoulders is nothing more than the top of a wave. You have a wave 4 here. Oh, actually, let's do it here. This is wave 4. Okay. And then you have wave 5 finished. And so this is your shoulder. The head is formed by the top of wave 1, wave 2, and then it begins going down, wave 3. So basically the head and shoulders is nothing more than the top of a wave. Let me just show it to you with wave numbers here. We got 1, 2, 3, 4, 5 right there. Again, then you got A, B, and C. And so for an Elliotian here, head and shoulders is nothing more than the top of wave 3 into 5 there. And there's your head and shoulders right there. Okay. Now, so I'm kind of looking. So we got FOMC tomorrow. So that means we're at a significant turning point. There should be a large move coming, and it may be coming, tomorrow or the next day, right? And tomorrow's move usually is counterintuitive to what you think it needs to be. That's usually the case. That it's a counterintuitive move on the news day. So I'm kind of torn between a couple of counts. Here's one. If we just kind of pump into tomorrow, so we just kind of stay in here and then we pump and then dump on news. So we kind of pump on the news, finishing this wave. So we play around here, finish the wave, and then we dump afterwards over the next couple of days. And this begins to come down. Now, I don't know where that's headed because this might only be the wave A, B, C, right? So we dump, yes. Okay, but this might dump for a month and not go up and make new highs, okay? Then we make highs later, right here, at least break that high, and that becomes our ABC, followed by more down. Or this is 3 waves, and it just needs a little bit more pump to finish, and then we're going down fast. That's all bearish way to look at this market. Those are all bear ways to look at it. My eyes are going crooked, guys. My head is just throbbing like crazy. Okay, let's pull the fibs from the top of this wave to the bottom of this wave. And you'll notice that we've hit the 50, but we haven't hit the 618 retrace. So here's the 618 area. That's the golden zone retrace. We haven't hit that 618. And so usually the expectation is that we come into this area. And so I think that's not a bad, expectation to look for price to move up into this area. But again, remember what I always say. Price goes where you expect it, just not how you expect it. So watch out that we don't get a move down here first before we come up here and take out that area, because this could totally take a lot longer than we're wanting it to. So it plays out and allows time for the market makers to do whatever they're going to do, the bankers to do whatever they're going to do before they dump crypto. They make it, this could be the result of some narrative, this dump, followed by some fake pump, fake out to the upside, and then boom, down we go. Okay. But remember that count right there becomes very long and takes quite a while. We get a bit of a dump and it takes a while to go down. But then we, again, there's just fake outs to the downside, to the upside. It's all about liquidity, guys. That's if they want to take a while. But if they want to do this in more quick fashion, this could be our 3 waves. All they do is pump it, and then they dump it, and they dump it quickly. Okay, so I don't know what the answer to that question is, but those are 2 ideas that I'm considering. That means we're setting up for a potential short. If we get some kind of pump into this zone here, maybe even the 786, 120K, 118, 119K range, we're going to watch to see if we get some kind of rejection that takes out wave structure, okay? Because if we get a rejection, then that's going to be a potential setup for a short. If we get a pullback, you look for a continuation, and then you can hold that short for quite a while. See if you get a dump all the way down to 50K over the next several months, right? So it could take longer than several months. It could take a year of price action to get it down there. So, or it could go a lot faster so that we get a V-shaped recovery back. So the faster, here's a principle that you guys can understand, because this is the way price usually moves. The faster price moves, okay, the faster it rebounds. A general principle I've noticed in the market is that the market rebounds the opposite direction of the way the market has been moving, in relationship, a correlated relationship to the same speed as it was moving. Okay, so the speed at which this came up will be equivalent to the speed at which it comes down, generally speaking. Now, it may not come down as much. It may only come down 60% or 70% of that move to the upside, but it'll come down with the same type of speed. All right, to give you an example, okay, let's just take a peek. You'll notice that this just kept going up and up and up, and eventually it got parabolic and fast. But look how fast price came back down. It came back down quite a bit faster. You see how slow and methodical it began, and then it picked up speed and then finished fast. And then it came, so where it began to pick up the speed, you'll notice price came down to that location where it picked up the speed. And it came down with relative speed, relative to that move. And you just kind of see that happening time and time again in the market. Okay, it's not always the case, but certainly it happens many times. You'll notice that this went up with some relative speed. Look how fast that came down. Okay, see how fast this went up with relative speed. Look how fast this comes down. Okay, so that's something I've just observed in how the market moves. Okay, so as we look at how this has been moving, it's been kind of slow and methodical to the upside, right? But if we get some kind of blow off, okay, top, boom, like really fast, go straight up and fast, look for it to come straight back down and fast. Okay, look for that. And that happens across all time frames. It's not always a perfect science, and it's not always perfect, but it's a general rule. Not a rule, but it's a general thing that I notice, right? So to give you some examples on the smaller time frame, you see how this thing just shot up really fast? Well, look how fast it came right back down, okay? Same kind of speed, same kind of... So when you see things, the faster something happens, the faster we know it's going to come. So it's better if you're bullish. You want to see price moving methodically and slower, because that means price is going to kind of, keep rocking, for a while. But when you see price shoot up with some relative speed, know this, that price will come, it will return with an equal amount of speed. Look here, see how fast that shot up, and just look, price. Now it didn't come down as fast, but it did return. So that's never a good sign. When you see price shoot straight up, it will be back. Okay, it will be back. So if we see some kind of straight up move that fizzles out, it's going to come all the way back. Okay, and it's gonna V-shape back. So if you see that happen, look for a pullback and then a continuation potentially. Okay, you'll notice that move right there. It got shot up really quick, and look at what happened. Boom, it took it out. Pull back, boom, pull back, boom, pull back, boom. Now we're going back up here. If you get a final move that's very fast, look for it to come back, pull back, and continue. Right, that's kind of what you're looking for. And it'll move, again, just pay attention to how fast things move, because very, very often price moves the same way. And you kind of see that, happen right in here, where price moved with some, you had a breakout to the down, and it just moved down and deep. But notice what happened. It moved back up to where it began gaining speed very quickly with the same relative speed. So that's kind of a normal pattern you see over and over in the market. So we just want to see what happens tomorrow on news. News is, again, 2 p.m. Eastern Standard Time, and then 2:30 there's a press conference. So it's going to be a volatile time of day when the rate announcement is made. Okay? All right, guys. Well, that's my take on Bitcoin. How's it going to play? It's anybody's guess, but I've offered some concepts here. If you asked me, I think there's basically two things on the table, 2 or 3 things that are on the table, just to summarize the ideas. Number one, if this is 3 ways, boom, 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 okay, we could be ready to get some speed up, take the high out. But if it goes up fast and takes the high, look for it to come down fast and take the low. Okay? Second thing, that's a bullish, bearish idea where we just depends on how it goes. If we get some relative speed and it just kind of comes up and hits the 618 retrace and then fizzles out there, then where it picked up speed and broke out, look for it to come back down to that area. Okay, maybe even take out the previous low for liquidity, and then work between this range for a little while in a correction before it continues down. Okay, that's another idea. Now, if it's going to just play around for quite a while and work this range a little bit, we might just see a little takeout. We've already taken out this high, but we might see one more hit to the high, kind of get a 5th wave here, and then boom, and then work a 3-wave move over the next week or so, doing something like that. Could take the low out or not. It could come down to the low, play around like it's getting ready to go, and then come up here. Boom, play around, trap some traders, come up here, trap some traders, and then we come down. Okay, and then all of a sudden you've got a 3-wave shape. And we could be in for something like that. And that's if the market's going to take time to create this pullback. In which case, the bearish count says, instead of this being 3 waves to the downside, we're going up. This was actually a local top, and this is a 1-2 to the downside. Looking for 3, 4, 5 after that. Around 50K is my target. Okay, So that kind of summarizes all the ideas. So let's see how price happens tomorrow, and see what happens for FOMC. I hope you guys trade safely, guys. Remember, just be smart. We're living in unparalleled times, in which the people in control of the money are really looking. They're not going to let you get rich, guys. They're not going to let you get rich easily. Let me just say it that way. So realize that there's lots of tricks of the trade and lots of FUD and lots of narrative. We live in an age of deception, guys, and so just try to see if you can identify the deception that's out there, and just realize that we are always being deceived. We live in a world full of deception, and crypto means hidden. So there's just be careful. I just want to give you a warning. Be careful. The God of this world roams about like a roaring lion, seeking who he may devour. The God of this world, little g. That's what Ephesians 2 calls Satan, the God of this world who runs the show. Now, we know that he doesn't have power or authority, but that which God allows him to do. But one day God will put him in his place. But until then, we're wading in waters that are very, very deep, and that we're swimming with sharks. So be careful out there, guys. All right, there it is. My voice is shot. I'm about done. I'm going to take a sip, and then I'm going to just finish by looking at XRP and Ethereum. Just take a quick peek at the charts, and then we'll call it a night. I hope you guys have enjoyed the channel, but I will look at XRP and Ethereum right before. But let me just take a little bit of a break here for a second. Just give me 60 seconds of rest, and then I'll push forward to the end. And pray for me that my head will just stop throbbing so I can finish up. Just give me 1 second, guys. Okay, here's XRP. Let's just take a peek of it at it from the weekly time frame. This is not a good chart. Let me get on the Binance chart that gives us more data. Okay, so is XRP ready to go to the moon? I mean, it certainly could be, but you got to understand its normal pattern is when it shoots straight up, it comes straight down to the breakout, straight up down to the breakout. So we got this big area where it shot up straight and it has not revisited the breakout. So that's out of pattern. Is it possible that this could be, instead of going up like everybody's expecting, come down to the breakout first, play around, and then go up later? Yes, that's possible. In other words, we expect XRP to go to the moon, but remember, everything happens. Price goes where you expect it, just not how you expect it. So a move down to the downside, back down to the breakout, would freak a bunch of people out, steal a bunch of money, and grab some liquidity, and then price goes where everybody's been looking for it to go. Again, I'm a little skeptical because I've been seeing a lot of $1,000 XRP, just these XRP videos in my feed on Facebook particularly. So I'm just wondering if there's something in the works here that's getting ready to be a liquidity grab. Okay, this certainly has the feeling. This move right here has the feeling of a pump, and then you got a three-wave pullback. And now, are we getting ready to go up? I mean, it's certainly possible. It's certainly possible. What else is possible? Here's something that I'm seeing as a potential here. What if this is a leading diagonal 1, 2, 3, 4, 5? There's your three-wave pullback. Okay, and now this is another diag. Okay, and this is 3, and now we need 5. 1, 2, 3, 4, and we get one more hit to the high before it dumps. Okay, so in other words, this becomes a three-wave pullback, and this is a 1, 2, 1, 2, and we're getting ready to come down and hit the low hard. So that's a bearish look at that wave structure that says, hey, this XRP might come down here, or this could be some kind of ABC or whatever. Come down here first, then come very deep, take out a bunch of people, and then V-shaped recovery later. In other words, If we see a major dump, if it comes, okay, I wouldn't be freaked out. Look at that as a buying opportunity of your lifetime, because I think there's a good chance that the next move up is going to be a V shape. Okay, if this wants to come down here, revisit this area, which XRP tends to do, right? This is going to be the buy of the lifetime, especially if it V shapes and then goes. Okay, that'd be kind of the last chance. Are they going to give you that chance? Maybe not. Maybe they just go from here. That's possible too, right? So I'm not saying any. I'm just making myself look at the chart both ways. Okay, so that's the bearish look. That the bearish look of XRP is that we say this comes, pops the high, that's a flat, and we come down. Now, there's any number of counts that we could get a deep one or a shallow one. That becomes 3 waves, and then it goes again. Okay, so those are some ideas for XRP. It's possible that this is this is a 3-wave shape that finished here, and this is now just 1 2 1 2, and this is getting ready to go. I mean that's the bullish look, okay. And then there's the complex look that says, well, we're forming something complex here. So this could be some kind of 1 2 1 2 1 2, and then it just goes. It starts kind of just it goes straight up, but it starts getting bullish. But right here we get a little bearish first and then bullish, right? So some ideas there from the wave structure. We have to see how this is formed, what's happening here. My favorite count is that, I mean, this looks very much like 3, 3, and then 5. Is 5 finished? Or do we need one more hit to the high to finish 5? So do we start pumping tonight into FOMC tomorrow? Get ready to, and then dump? Does this go up fast and then anybody's guess? So that's kind of what's at stake. But when you just look at it from a breakout standpoint, we've broken out. Is it guaranteed to go up? No, it's not guaranteed. But it could. Totally could. Just watch out, guys. Remember, things go where you expect it to go, just not how you expect it. Let's look at Ethereum. Ethereum's a big conundrum to me. I'm a very big believer in Ethereum. I think Ethereum's here to stay. I think it's part of the next banking system. Is Ethereum ready to go forever? Is it ready to keep rocking? Well, I mean, this wave right here looks very 3-wave-ish. Very. So are we ready to get something down, or is this some kind of ending wave here? Two ways to look at this current wave structure right here. 2 ways to look at it. Number 1, this was A, B, and that was C right to here. Now we're 1 2 1 2. Here we go. Okay. Or this was the end of something. This is a leading diag. 1 2 3 4 5. This is A, B, C. Now this is leading wave. We need this to finish, and then down we go. So little pump tomorrow maybe, but into a dump later. And that's kind of what I'm going to watch out for that, because that's kind of what I'm thinking. Just you got this 1 2 3 4 5, A, B, C. It's finished. The initial move down, maybe we pump, boom, and then down we go. If we pump at all. Do we pump tomorrow on news? It's anybody's guess. Now, this could be some kind of flat right here, and we dump again. So that could be another look at the wave. We get some kind of dump tonight, hit the low, and then we pump later. So those are my quick looks at that. I don't have the answers. I think it's another case of they've made the charts look like they could go either way, but this very much looks like a flat right here. Is this getting ready to come down and hit the low again? Could be. Could be. Or is this going to pull back and keep pumping? And that could be as well. Yeah, I know it's either way, right? I know somebody's up or down, right? It's always up or down, but just trying to understand these waves. What is this? 1, 2, 3, 4, 5. 3-wave pullback. Boom. Is that a 1, 2, 1, 2? And we're getting ready to go down even deeper? I mean, maybe. Is this 5, 3, 5? And that's just 3 waves, and now we're getting ready to pump up the jams. In other words, is this 3 waves? Now we're getting ready to go up again. So that's 1, 2, and then now we're getting ready to get real bullish. That's the bullish look. And that's what's challenging here. What is this? Is this the end of this wave? A 3-wave move, and now this is we get a 3-wave pullback, and then we go. That's the bullish look. All right, guys. A lot of questions, no answers, but FOMC is tomorrow, so let's see how the market moves it. All right, guys. Thanks for being with me. Hope you enjoyed the content tonight. Let's see what happens. With that said, I've got to go tend to this headache, guys. But I hope you all have a great night. Thanks for stopping by the channel. I'm glad you made it, and thanks for being here. I hope it's been informative for you. With that said, have a great night. Kimosabi, good to see you, buddy. Make sure you check out Kimosabi's channel. He's a great dude and has a great perspective on the market. So go click on his, subscribe to his as well. 24-hour stream. I hear you between the aisles. Hey, maybe we could do a live FOMC stream tomorrow. That'd be fun. I'll be here. Maybe I'll go live for FOMC. Let's see what happens. Yeah, that'll be good. All right, guys. Have a good one. We'll see you. Bye-bye.